Hello guys, and glad to have you on. But again, today we're going to update one more time this week because of course lots of volatility has been happening yesterday, specifically into cryptocurrencies. The rest of the market, and specifically stocks, just don't even give a shit about it. It's really all about Thanksgiving, and happy Thanksgivings to you guys, of course. And that's, by the way, what we're going to be talking about, these cryptocurrencies. So of course a lot of people are raising questions because anytime we do have a little bit of volatility, people tend to get nervous, and not to call them stupid at some point. I mean, they let themselves being driven by some emotional stuff and stuff like that. So once again, think about that when market rise pretty quickly, and that definitely have been the case recently. There is definitely the opposite effect that may show up later, which means volatility can rapidly express to the opposite direction, and it creates kind of a stupid reaction to these sentiments because you overexcite yourself, and then when things just turn out to be consolidating, you turn this to be bearish. So have we sent a signal to be reversing yesterday? I doubt we had. I think that what we've done instead is more of changing the behavior in which people are getting used to. And to be precise, I think that what we are going to do, I'm going to take multiple examples, but I'll save that for this week update, in which we're going to compare the different reactions we've had throughout altcoins. I'm not even talking about Bitcoin because, once again, Bitcoin has a lot of room to the downside at the moment, but most importantly, the BTC dominance has retraced to some levels in which it could be sold. So I'm definitely not getting into buying Bitcoin right now. I think where Bitcoin goes mostly depends on where the altcoin goes. So I think it is not the reverse engineer stuff in which Bitcoin drives the entire market. I think this is definitely the opposite that is at play right now. If altcoins maintain valuations, then Bitcoin will not go any way further than that. If altcoins just flush one an additional way to the downside, and we'll see potential targets if that happens, then Bitcoin will have no other choice but to lose even more ground than that. We'll see all about that. Okay, so first of all, let's take the broadest altcoin example. I'm going to take Ethereum as a reference out there. Of course, assessing that, okay, don't get me wrong, you will have to replicate this analysis through each and every one of these, and this is what we're going to be doing throughout the weekend. Okay, so today is just an example of more shorter time frames. So what matters at least is when you have a consolidation, you know that something just ended. So you need to put a framework to this. You need to find the appropriate time frame in which these movements become not necessarily significant. You need to find the bigger picture in which what recently happened doesn't make any sense. Or not sense, just doesn't necessarily change courses on the time frame. So in here, the time frame in which what happened yesterday barely visible, doesn't change anything, is the weekly chart time frame. So you need to find the structure that is the broadest possible in which your supposedly shocking volatility is barely visible, or at least doesn't change the whole game. Okay, so weekly basis, you can barely even see what happened yesterday. It's not the end of the world, it's just consolidating, and this weekly candle still looks firmly bullish to me, okay? It's definitely not just the type of things you want to sell, but it's definitely not the type of things you wish you have bought right at the top. We've clearly stated that 600 was an area of interest for Bitcoin, for crypto, and specifically for Ripple. Oh, god damn it, I'll get it. For Ethereum, specifically, because we're trying to overflow the resistant context, okay? So of course, I don't see a huge horizontal attraction toward this level. That's the reason why I decided to not cover the portfolio at that point, not yet, but gathering information. What we've had is, if we get to close this, and we have to close this, don't remember that depending on what we'll have by the end of the week, things could rapidly change. So at that point, we would eventually have an overbought cluster. Overbought never has been a short signal, but when it happens into the resistant context, that's something. But that is a trend signal, which means overbought cluster must happen with the trend channel. Okay, all of the trend signals must behave on the trend channel. They can be, of course, with the context in here as well, but oversold and overbought, oversold, all of the blue clusters only occur when you trade with the trend channel as well. Okay, so I would question now that if I delete prices, okay, and first and foremost, this signal isn't yet validated, which means what we're dealing with right now would have to be confirmed by a next week response to the downside and with a confirmation triangle. So it's still far from being bearish. It could be, but it has to be confirmed by next week's candle. Okay, and more importantly, right now, I think this signal doesn't make that much sense because look at where we are. We are trading far above the trend channel. We totally broke through it. So are we overbought after trying to accelerate? Of course we fucking are. And I would say this overbought cluster is more likely a sign of a trend than the sign of a market top. So I think the trend is on the verge to emerge. And in order to do that, a trend has to break a resistance, follow a major structure, and this is where I have a little bit of trouble with Ethereum, but I could definitely tell that we might have an unconventional structure. Remember that in cryptocurrencies, the most conventional trending structure is the typical wave 5 extended, in which we early build some kind of a range. It looks bullish, but not enough. Then we create some kind of an overlapping support, and then we surge and break resistances, and this is where you got the breakout. Okay, so we break on the late stages of trends. That's the FOMO stuff, whatever. That's the typical way of trending into cryptocurrencies. Okay, in the stock market, for example, the general way of trending is this one, in which we create kind of an accumulation, we break, then we make a divergence, a pullback, and a final excess. Okay, and in this structure, we call them third wave extended, which means the third wave is the one that gets the breakout, that gets the highest momentum. That's the one in which everyone can say there is a trend. There is an alternate structure, which is wave 1 extended, in which we create an early stage, we accumulate, we break, okay, then we consolidate, then we push one more time to the upside. It definitely looks like a reverse in here because you feel like a pullback occurred, but generally this market gets to consolidate one more time, overlaps, and makes a second final excess, okay? And you have all of the trend behaved and the breakout occurred into the first wave. Okay, and you have two pullbacks with something that looks like two final excesses later on. And now that I just showed you that, don't you think that this structure pretty much fills this thing? Where's the breakout? This is definitely where we broke. And we can clearly state that, and it really looks like this is an extended wave 1, consolidation, this looks like a final excess. I would definitely say that normally we're supposed to reverse out there, but it doesn't make any fucking sense. Then we make something that looks like another pullback. We'll have to confirm that throughout next week. We would be overlapping the previous level, and in that perspective, would be still one more level to go. And then we will probably get a market up. So that is going to be my underlying structure as for now. Once again, remember that a plan doesn't mean these things will act exactly this way. It's just like I need to have a forecast. And then I'll adjust as things go on and as prices tend to plot themselves on the chart. But it definitely looks like this is where we've trended. This is where I see prices breaking and not being retraced to. So I think that this is the very likely structure we're into right now. We've made in here wave 1, 2, 3, that is shorter than the first wave, both in amplitude and duration, which leads me to believe that we have very likely probabilities of holding this overlapping level and pushing for a fifth wave that normally is shorter than this one. Though I would target somewhere into this trend line in here as a target area that give me a $700 cluster for Ethereum in where I would definitely consider risk managing. That doesn't mean the market will reverse out there. It just means that in here the probabilities of keep on pushing up will be very limited. Okay, I don't know how far we could retrace, and let me be clear, we just have to break this trend line later on, which means we could just retrace $500, find some bulls, and later on get to break without a problem. So it just means that this trending structure might terminate at $700 and that I will have to cover partially the portfolio. Of course, if I have no signals, I'll do nothing. And the amount of the consolidate or the cover trades I would eventually take will depend on the signal. So that is my plan right now. What does that mean? That means that yesterday's volatility needs to be a range. And until further notice, I'll consider it to be the most likely probability. So now we need to find a range. Okay, I've got a plan. I've got a plan ahead. And as long as things turn out to be going this way, I'm not going to readjust. Okay, so I will have to find a range because If I'm right, then this range should overlap this level or get to find a bottom near this area. And therefore, I need to find a range that can structure itself within these boundaries. Okay? So let's go for hour. Okay, definitely not yet a range. We're so far away from the moving from the context boxes. Remember that a range goes from context to context. So in here, 4 hour feels totally inappropriate. Got a bullish rising moving average, rising context, and all of those things. But we can see that the lower time frame feels pretty appropriate. So 1 hour chart time frame is definitely where I think the range is settling. There, we clearly have reversed from context to context. Give it a second to plot. Okay, here we are. Still have a fairly positive moving average. That's definitely the sign of something that looks like a pullback. Okay, moving averages are rising. We can see that a trend has been proceeding. Okay, it has gone pretty and firmly bullish out there. That's great. Okay, we do have something that looked like a trend, but the thing is that we retrace violently to the opposite direction. So this is definitely where I think the range has most likely probabilities to settle. So in a range, what happens? First, second range boundary, not yet confirmed. Okay, so we're still looking at validating or keep on pushing to look for a second range boundary. That is an expert trade, which means I don't want you beginners to try putting your fingers out there. Just wait for the second range boundary to be built. Once it's done, it should retrace to the resistant context. That's the end of it. Don't make things overcomplicated. At that point, we've made several candle closes below the context, but we failed to close the context below. Okay, we've closed the context right there, which is a positive sign. So I would say right now, I would definitely have a look at the 61% retracement, but I'm most likely going to favor the 76. There has been quite a volatility outburst, yes. And this is definitely where the third range boundary could show up. But I would say being firmly aggressive and short selling right at the 61% would really require hell of a bearish signal. And we'll see all about that later on. So right now we do have a fairly good candidate for a second range boundary to have plotted itself. That is my job to tell you. To tell you so, because remember that you've got the trading lesson to tell you all about it. The third range boundary, when we get there, to orientate the probabilities of getting either a bearish trending range or just a neutral range, we are going to assess the quality of signals for first and second range boundary. Okay, so this one is still speculative. It's only going to get validated when we get to the third range boundary. But let's make that assessment right now. Okay, what is the strength of the signal on the market chart? It's just a divergence, barely even visible on charts. So I would say pretty weak bearish signal out there. What's the type of bullish signal reaction we have on top of that? Is okay, bullish pattern. This one is an indicator mistake. I'm going to correct this one. The pattern should have shown up right at the bottom. So we would have a bullish signal on the trend channel. Okay, that is far better than this. So I would say the quality of the bullish signal is better. That would reinforce for me the probability to go right up to 76 and go for a neutral range rather than a bearish one. Okay? So that is what we would do at the current given time. Of course, remember that this is not just all about it. There's of course assessing the strength of both waves, comparing wave 1 to 2, comparing it to the wave 2 to 3. So this is something that we still not yet have on board. So we need to wait for prices to show us the strength, and then we'll get the study. So at that point, let me be clear. This is experience stuff only. Don't go down this road right now. All of the traders, specifically those who trade ranges, need to wait for the third range boundary, and that will be our reference point. Yesterday has been hell of a blow off top for some people, okay? But the thing is that if we build a range, the only thing that matters is where's the third range boundary, how long the range takes to get matured, and which side do we break out of it. That's just as simple as it is. Don't make it overcomplicated at that point. I doubt we get a reverse. At least if we have one, we're going to have to build a range and to reverse, because the uptrend on the higher time frames are still there, and therefore that means we need to range before reversing. Of course, there's still some slight probabilities in which we can totally fuck up these probabilities and just go from bullish to bearish without even telling, but this is not the likeliest probability, and you need to understand that. Okay? We're not trading to know what the future is, and I goddamn don't know what the future is, but let me be 100% clear. I play with statistics, and I've always been successful over time with these statistics. Of course, from time to time, these will fail, but this is not what matters. No one can be 100% reliable and perfect, but over time, those who have a set of rules and do it well always are the ones that are successful. That's all about it. So, okay, don't overthink things. Don't go too much emotional. If you do, that means either you have too much exposure on this market, meaning that most of your portfolio is exposed to one asset, which is very dangerous and definitely not how trading should be done speculatively. So think about it, okay? If you're getting way too emotional with your assets, that means you probably have put a little bit too much money in this. Okay, that's not my case personally. I do enjoy the nice upside trends we've had recently on cryptos. I understand that some consolidation is totally legitimate at that point. I'm just waiting for prices to tell me which time frame the ranges are likely going to be built on. Until then, I've got nothing else to say. Okay, regarding the stock market, of course, I've got nothing to add as well in here. Everyone's going for Thanksgiving, and therefore volatility remains pretty low. I just goddamn don't know which way we're going to gap on Monday, and therefore pay attention to your expositions. If you handle trades on an over-week basis, you have to be aware of the fact that this is going to be a gamble. We're definitely going to gap one way or another, and it's absolutely impossible to figure out which way. So try to be as balanced as possible, or try not to be overweak and exposed. That's just as simple as that. Personally, I think I'm great, which means I have a tiny position on the German DAX. Can totally be gapped down and turn out to a loss. It's currently a gain. But on the opposite direction, I still have my cover trades on the S&P 500, partially taken off the table. But I think pretty much in here, I am well exposed over the weekend. I don't know which one is going to succeed. One of these positions is going to fail. I just don't know which one. Monday will tell me all about it. Until then, I'm paying quite a lot of attention to USD WTI within the next few days. We're into a reversal area. I'm still caring a lot about the gold, which is still not showing any signs of strength on this support. One of these two guys is lying. I just don't know which one. But we cannot have a bullish WTI with a bearish gold. We can, but it feels totally inappropriate at the current time. So one of these guys is lying. I just don't know which one. I'm trying to support gold, just like I'm trying to sell WTI, and one of these positions will end up with a stop loss, likely at break-even, and the other one will succeed and probably create some nice moves. That's all about it. I'll let you know that will be on this weekend's updates, and that is probably going to be my major plan for next week, arbitraging one of these guys, arbitraging these guys to figure out which one is the liar. Bye, guys.